Good morning and welcome to the room. Ron, you had that loaded waiting for me to talk, huh? Welcome to Heckle Day. Is it Heckle Day? I like it. Trigger tracker. Here's one for the lawyers, guys. The CFTC required hypothetical and financial risk disclaimer. Um, Guys, this is an educational room. This is not a call live trades and tell you when to get into the market. This is not me doing the work for you guys. This is me teaching you how to get the work done. Um, and what we do every day in here is we learn to read indicators, and that's really what it is. We're going to learn to read indicators and make good decisions. One of the good decisions that I make every morning is I go check news, because news can upset the patterns that I'm trading. News can make a market spike, it can make it jump, but here's something. The market can spike and jump no matter what. It doesn't have to have news. But when you know that it's coming, it's easier to avoid. So at 10 a.m., we have medium impact. That's going to be the preliminary University of Michigan consumer sentiment and an inflation expectation. The market may react. It may spike. It may mess up your patterns a little bit, guys. So just knowing where it's at is part of my morning routine. And you haven't said this in a while, but I'm going to say it today. There are no secrets. If you're new with me in here, there are no secrets, guys. I don't hold anything back. One of the things I don't do is I don't teach you every possible way to use the software. That would take an infinite amount of time. But here in the resources under trading guides, everything that I talk about can be found here. For NinjaTrader 8, everything that I talk about, the indicators, all the things for the high probability trend trade. The same is true with TradingView, the indicators, trading plan, everything is made available to you. Whoops. So what we're going to do in this room is the same thing that we did yesterday, the same thing that we're going to do, well, not tomorrow because tomorrow's Saturday, but we'll do it next week and probably for the foreseeable future, guys, is we're going to learn to read charts. You're going to learn to read charts. Believe it or not, I'm actually pretty good at it, so that's why I have the microphone. And we're going to do it in the most basic way possible, the most remedial way possible, guys. I'm going to remove as many moving parts from the educational process as I'm able to so that you can focus on what's important. So you'll get checklists with 3 rules, only 2 charts. And the idea is that you're building this foundation to learn to read your indicators, guys, because you're going to learn to read your indicators in order to recognize advantages. Advantages become your trade. And it's important that you begin thinking in these terms from the very beginning. A trade doesn't win because you want it to win, and a trade doesn't always lose because you did something wrong. Trading is a study of probabilities. It is taking a pattern that you can prove wins more than it loses. You should go back, study it, prove it, verify it, validate it, and learn to trust it. And by doing so, it creates an edge or an advantage. It's the advantage, it's having that edge that should be the driving force, the catalyst that gets you into the market. You're going to find that searching for that edge, chart reading, it's about 90% of the day. I'm certain there are people in this room that would say, oh, Mark, it's more like 95, but I don't want to scare anybody away. You're going to get great at doing nothing. You're going to get outstanding at finding little ways to distract yourself as you wait for advantages. And if you really focus on your chart reading, guys, you'll be able to look at a chart and recognize those advantages in a matter of seconds. John and I always joke that if it takes more than 8 seconds to know that you have a trade, you're probably fabricating. You're probably making something up and breaking rules. So your chart reading is going to happen fast, guys. 10% of your day will be actually trading. But you're going to understand, with a little bit of study, where the market is likely to continue. You're going to understand where it's likely to go, and you're going to understand where it's likely to stop. And that word likely, that likely is a very important word. Here comes the heckling. Because The reality is the market's going to do what the market does, so we focus on those patterns giving us that advantage. But the concepts of likely to continue, likely to go, and likely to stop, these become ways to enter. They become ways to manage. And I think most importantly, understanding these concepts is what allows you to embrace the 90%. Trades can be broken down really into three categories, I think. There's probably a million more, but this is easy. You can have a high probability trade. This is when all indicators on all charts align with the rules for the trade, guys. This is the best of the best. This is what I talk about for the first hour every day. This is what I encourage new users to focus on as you learn to read your indicators. So the high probability trend trade is really the focal point of the first hour. When you understand the high probability trend trade, and if you're a good studier, you're gonna start picking entries within a week. There's no doubt in my mind. It opens the door for what we call a medium probability trade. This is going to be the majority of your trades, I'm going to tell you right now. You're not shackled to the best of the best. You're learning the best of the best so that you create the recognition to find more. This is where most of your indicators align. However, small issues exist. Issues should have been singular on there. One advantage is gone. One of the advantages that you look for to get into a trade suddenly goes missing. And you say to yourself, wow, this isn't the best of the best, but it's still pretty darn good. I'll take this trade. I'll manage this trade assertively. I'll get to break even a little faster. Maybe I'll take quicker profits than I typically do in a high probability scenario. And then again, because you can recognize the best trade, you're going to understand when it's low probability. When multiple conflicting signals, maybe one chart's up, the other one doesn't support it, one chart's fast, one chart, I don't know, whatever it's going to be, but your advantages begin to dwindle and go away, and you're going to say to yourself, as the intelligent investor that you are going to become, I choose not to enter on a low probability scenario. It's just not worth my money, it's not worth the stress. So we're going to focus on the advantages that put us in high probability. And then from there, you'll recognize the loss of one, creating medium, the loss of two or more, low. And guys, you're going to be in control of the entry. Nobody can make you enter the market, I hope. Knowing what's working for you and against you, it helps you make decisions not only on entering a trade, but how aggressively you may need to manage it, how assertively you may need to get out and get to break even. And it's all going to be defined by what it is you're looking at on that screen. I will give you every tool you need to be successful with the software, guys. I won't hold back. I won't keep secrets. I won't retain knowledge from you that you need. And for you guys that are like, man, if I could just get an hour with Mark outside of the classroom, I could become a better trader faster. It's not true. I've done hundreds of private sessions, and I've never said anything outside of this room that I don't say in the room. So you will get everything that you need. What I've just dropped into the chat box, download these. These are the KISS plans. KISS plans for NinjaTrader, which is what we're going to cover first, outlines the high probability trend trade, gives you a checklist for entry, even gives you some ideas on management. And towards the bottom, it gives you a checklist for a medium probability trade and a way to manage it. Both of these plans that are dropped in the room, they share this, even though they're different platforms. This plan is a stepping stone, guys. It's a stepping stone in your learning journey. It's designed to teach you how to read your indicators. These trades are designed to optimize your chances of success. This is the absolute best of the best, not the only. Through study, simulation, class feedback, and practice, you'll write a plan that suits your needs. You'll write a set of rules that aligns with what you want to get out of the software, guys, but it all stems from the ability to read indicators. So both of those are in there. We're going to learn the trigger lines and Fibonacci rules. We're going to learn the rules for entry, and that's really what we focus on is entry. Great traders, mature traders manage risk before they ever manage profits, guys, and great entries create very manageable trades, but the money is made in management. Everyone has the ability to simulate, to practice. Nobody is forced to go live money day one. That would be ridiculous, wouldn't it? But post your pictures in the room. So as you practice, open the door for a private session with me. Open the door for me to see what you're doing. Tell me what you saw. Tell me where you did it. Tell me why you did it, guys. Tell me what advantages you saw, how you read your charts. And the more information you give me on a chart, the better the feedback I'm going to give you. We will talk about those three concepts: momentum, path, and entry. We will look at your entries. We will look at your exits, guys. We will discuss anything and everything, and I'll give you everything in my power to get you one step closer to where you want to be every time you post in my room. And you gotta get that post in there. The first two are pretty painful. They're scary, but once you get through two or three of them, guys, it really does get easy. And then keep it simple. I showed you that plan. It's only two trades, guys. That's it. And we're really learning one to get to the second. You've got to learn the looks. I mentioned that these are patterns. So what you're doing right now is you're creating recognition through repetition, through doing the same thing, through studying the concepts, through seeing the same stuff every day until it begins to stick. And the more you study, the slower the market becomes. The more you study, the quicker your reactions are, the more you're calling your shots. So I changed this picture out a little bit because I do want to say this. Well, I promise to give you everything that you need to be successful with the software. Guys, we're gonna talk about analysis, recognizing advantages. I handed you rules, and I'm present to give you coaching. 15 hours every week live. All you have to do is take advantage of that. But it will be you that's responsible for becoming the profitable trader. You're gonna have to learn these rules, guys, and you're gonna have to simulate and practice and start to get good at them. And you're gonna have to create that recognition. I'm here to help, but you are my horses. I will lead you to water. It will be up to you to drink. And when we say that there's a step-by-step path to becoming confident, guys, this is proven. Nexgen has had live education rooms since 2000. We've been teaching people to read indicators and day trade for nearly 30 years now. Post in the room, become a part of the discussion. And guys, track your progress. Use the spreadsheet. So I've also given you in the room these spreadsheets. Oh, and it looks like I've even given you the PowerPoint that I'm going to use to teach. So the spreadsheet for NinjaTrader has strong triggers, clear path, and entry. The three rules, where did it go? The three rules that get you into a trade. They're broken down in green, and then in red it also shows you what it looks like to not have them met. There's client trades, over 500 pictures of pretty much the exact same pattern, guys. Pattern recognition. There's a place for you to build your plan. That's the third tab. I lost my mouse. And then there is a trade tracking sheet. There it goes. And the trade tracking sheet is a big part of the study. Whether it is TradingView or whether it is NinjaTrader, the trade tracking sheet is a way for you every day to say, hey, this is the trade that I took. Here's a picture of it. Probably looks something like that. And the way to really get the most out of that trade tracking sheet, and guys, I'm telling you, this is your best study tip that I can give, is go back every morning and study what you did yesterday. We are all prone to mistakes as brand new users. We're even prone to mistakes as experienced users. It just happens. But if you wake up every morning and you look at what you did yesterday and you say, hey, what worked? You're focused at 5 a.m. to repeat the things that work. And if you ask yourself what didn't work, well, then you become focused at the start of your day to begin to avoid that process, the things that you're doing that don't work. And you'll see it on the feedback section. There's a spot for you to put your feedback from class, to be able to say, hey, here's the trade that I took. This is what I saw. This is what Mark told me about it. And guys, you're going to see the same thing repeat in the beginning, and it's going to be your thing. That's a phrase. I need to trademark that. Your thing will be the thing that's keeping you from success. Maybe it's not waiting for the correct entry. Maybe it's jumping into a position without momentum, right? Hey, I'm taking a momentum trade, but there's no momentum. We'll identify that together. Maybe it's trading in determination conditions. Guys, whatever your thing is, it takes me about 3 or 4 pictures in the room to identify it, and then we instantly begin to work together to correct it. This little study sets you up for the day, and it really will. It'll accelerate the learning. So what we're going to do, once again, is we're going to focus on one trade first, the high probability trade, the best of the best. This is for NinjaTrader. I always begin with NinjaTrader because I have more NinjaTrader users in here. And it's only 3 rules. That's it. 3 things to get you into the highest probability trend trade we teach. This trade, these rules describe a pattern. That pattern can be proven. And guys, I want you to prove it. If you're new in here, if you're evaluating the software, I want you to latch onto the spreadsheet and I want you to just pretty much tell me I'm full of beans. Because if you put the work in to prove it or disprove it, you're going to be with me this time next year, guys. Each rule, when it's true, describes an advantage. Strong triggers will give me the advantage of momentum. A market that is very difficult to stop. No termination conditions will give me a clear path. Termination conditions are those areas likely to stop the market. You're going to see them long before the market ever gets to them. You're just going to have the patience to not trade directly into them. And then finally, entry, guys. This one is specific to the trend trade. This one defines where the market is most likely to continue with the underlying trend. This is the one that allows you to reduce risks, maximize profit potential. So these 3 rules happen on only 2 charts. Traders love indicators. Traders love multiple time frames. Traders are notorious, raising my hand and exposing myself, for believing that the more information you can shove into one screen, the higher the probabilities are that you'll win. And guys, I think poppycock is the word that I want to use. Simplicity. Make it easy. Make it focused. Your first 2 rules are met on a large chart. And the large chart's a very slow chart. It's a very broad stroke of a brush. The large chart's difficult to see change on. That's how slow it is. And it takes the most current bar to define direction, momentum, and areas. Your first 2 rules are recognized and proven true in 1 bar on this large chart. And when they're true, you'll go to the small chart. And this is your refinement chart. It takes that big picture and it breaks it down. It's almost like an X-ray of that 1 bar that does all the work. And in the perfect trend trade, you'll see on a small chart a retracement, which is a small movement counter to the underlying trend. Very often you'll see a bounce right at an area inside of triggers, and you'll see continuation. All of that happens, your entry and probably your first profits, inside of that 1 bar. This refinement process does allow you to reduce risk dramatically, and it does give you the absolute furthest possible distance to your profit targets. We use these 2 charts because, as bad as Novak men are at analogies, this is a pretty good one. Who are you trading with? Who are you trading against, guys? Your large chart is the big crowd. These are the movers and the shakers, the men and women with the money and the influence to create a trend, to establish a momentum. These are the same individuals that react right at those key areas that you know about long before you get there. Large crowd wins, guys. 70 to 80% of the time, when the rules are met for a high probability trend trade, the large crowd wins. The small chart, man, these are the yahoos that fight the large crowd. Don't be that yahoo. They create that retracement, that little push counter to the underlying trend. Guys, rule number 3 is designed to pinpoint exactly where they are most likely to fail, that 70 to 80% of the time, which means that when you follow the methodology for the highest probability trend trade we teach, you are in tune with the large crowd's trend, you are riding their coattails on momentum, and you have identified that there's nothing in the way to stop them, and you're rooting for a small crowd fight to get you to your perfect entry. We're going to take these 3 rules, 2 charts, and we're going to use the indicators to identify them as being true. This is just indicator review, guys. There are areas on both charts. Areas are lines on a chart is the easiest way to say it, I think. Divergence highs and divergence lows. Magenta, cyan, if you're an 80s baby, hot pink, baby blue. This lets you know that there was a loss of momentum at a pivot. That's all it is. Divergence is a loss of momentum. You don't even have to know the math that creates it because the software does it for you. Fibonacci resistance, Fibonacci support. These single lines, based on tens of thousands of calculations from different time frames, show you where the market may stop, bounce, reverse, whether the market is going up or down. Yellow 1-to-1s is a singular Fibonacci calculation. It's a 100% Fibonacci alternate. The big crowd loves these things on a large chart for targets and entries. On a small chart, we can use them for entries. That's where the small crowd's most likely to fail. And then you're also going to see a mid-band running through. So anytime you hear the word area mentioned in the room, we're talking about one of these lines. In an uptrend, divergence highs, Fibonacci resistance, yellow 1-to-1s, may all behave as resistance. In a downtrend, Fibonacci support, divergence lows, yellow 1-to-1s may all behave as support. And then the other indicators are triggers. And that's it. It's a short indicator list. There are small triggers and large triggers. Small triggers are two solid lines. They are a fast-moving average. Large triggers are two dashed lines. They are a slow-moving average. You're going to use trigger lines to define momentum, assuring yourself that rule number 1 is in play. You're going to use trigger lines up against those areas to define them as termination conditions, making sure that you do in fact have a clear path. And you'll use these large trigger lines for the amazing entries on the small chart. Because one of the great things about a moving average is that price tends to return to a moving average. That's how you're going to pinpoint entries. And we're going to do all of this greatness and give ourselves the potential to win 70 to 80% of the time with only 3 rules, guys. So now I'm going to break them down. But I want to do this real quick. Tigeroy, or maybe Tidgeroy, PSP 116, Mahesh. Guys, if you are brand new in my room, one of the things that I did to myself, so maybe I'm projecting a little bit. One of the things that I did to myself is I put a lot of pressure on myself to be good at this on the first day. Guys, your first day feels like this. It's a little overwhelming. There's a lot coming at you. There are defining what an indicator is. There's learning what the areas are. And then it's going through 3 rules to create a trade. Guys, day 1 is not the day to be proficient, but if you keep it simple, if you allow it to be focused, and most importantly, if you give yourself just a little bit of grace, allow yourself to be new, take a day to learn momentum. Rule number 1. Make sure that you're comfortable with that. And true story, you'll be good at it in about 8 minutes. And then spend a little time. All right, I've got this momentum. Let me go back and study termination conditions. Let me use that spreadsheet. Let me go stare at these pictures. Let me commit them to memory to make sure that I have a clear path. And then you're going to take those 2 and you're done with the large chart. You've done all your large chart work. And then you'll go back and you'll study that pattern for entry. And you'll realize that it is just a pattern. And you've got to learn the language that describes it. And you will call your shots from 4 to 5 minutes out before you ever get them. So do me a favor. Don't put the pressure on yourself to be great on day 1. Focus on the individual parts that create a trade. And it all starts with strong triggers on the large chart. And strong triggers, this is about the most simple lesson that you're going to get. The large chart background defines trend on NinjaTrader. If it is green, the market is going up. We're looking for rules to be met for high probability trend trades long. If it is red, the market's going down. We're looking for rules to be met for high probability trend trade short. And I say looking for rules to be met because just because it's green doesn't mean I'm jumping into the market. Just because it's red doesn't mean I'm jumping into the market. Guys, if that were the case, I wouldn't need these 3 rules. But I want to know which way I'm going. And here's a little cheat code for you guys. The only way you can ever have strong triggers is if the background, the large, and the small are all the same colors, whether it's green or red. So the colors have to match. Strong triggers is a singular look, guys. It either is or it is not. Strong triggers is like pregnancy. In an uptrend, the small triggers break above the large triggers, and it's space in between the large triggers that lets me know they're strong. In a downtrend, smalls break below the large triggers, and it's the space between the two that let me know that my trigger lines are strong. So I encourage everyone, just think of it this way. When scissors are open, you can cut, right? When scissors are open, you can get the job done. Life is pretty good. Pretty easy, right? So is everybody good? That's it. Strong triggers. That's your whole lesson. You learned a third of what you need to know in 3 minutes, guys. Separation is strength. And if you remember that separation is strength, it's easy to remember that when the separation is gone, it's weakness. And weakness is the opposite of strong. And here, the odds are favorable for the trend to continue. And here, anything can happen up or down. So I encourage new users to keep it very black and white in the beginning. You either have rule 1 met or you do not. You either go to look for rule number 2 or you sit on your hands and you wait for rule number 1 to be met. And if you let it be that simple, what you'll find is that there's a little bit of waiting, but that momentum always seems to come back. And then you start to grow. And I put this in there because my new users always feel like that high probability trend trade impedes their progress with the software. I like to let you know there's a lot more coming, guys. There really is. But this will always be your best look. Always. Without question. And then you'll notice, because you understand the difference between strong and weak, that there will be opportunities that present themselves in between the two. But you could never say in a million years, I have my best look with one trigger line inside and a separation going away. You could never say in a million years, this is my highest chance of success with the weakness in the triggers. You're going to know what it looks like, and then you'll be able to make decisions when it's not perfect. And guys, that's your strong trigger lesson. Strong triggers on the first bar. Smalls are up, large are down. The colors don't match. I don't have strength. Can you give me a why in the room if that makes sense? Really one of the easiest lessons I think that you're ever going to get out of me. Colors don't match. I don't have strength. And you don't even have to look for number 2. I love it when you guys ignore me. That's okay though, because I've got some self-confidence working on my end. Guys, once you have momentum, you got to make sure there's nothing in the way. When you define a market that's going to be hard to stop, you also have to say to yourself, well, there are areas that could stop this market. And guys, this is my favorite picture. One of our clients gave it to me. That's your termination condition. I don't care how fast you hit it, it could stop your forward progress. And it's a pretty easy recipe. The large chart is in control. The large crowd is in control. The large crowd makes decisions at key areas. They enter. The buyers buy. The sellers sell. This is where bounces happen, where reversals typically come from, guys. This is where decisions are made. And if you embrace that, all you have to do is let them get there. Price reaches the area. So price is in these dynamic Renko bars, right? It goes up and down all day long. When your price reaches resistance, the large crowd's likely to make a decision. The area could break. Areas break all the time. The area could create just enough bounce to take you out of a forward position, or the area could reverse the market completely. And guys, you'll never know what's going to happen. We like to think we will. Day traders love to use phrases like it should, it will, it's going to, it has to. And again, guys, that's not true. It may, it might, it could. The reality is I don't know what the reaction is going to be. So if I reach an area and all of my trigger lines stay below that area, it's a termination condition. My highest chance of success comes from doing absolutely nothing, not taking trades into an area that could stop the market. And then if the market comes down and it reaches Fibonacci support, all I have to do is say, where are my triggers, guys? And if all 4 trigger lines remain above that area of support, that's an area that could stop the market. That's an area that could create an untradeable bounce. That's an area that could break. That's an area that could reverse. I don't know what it's going to do. But what I do know is that about 60% of the time, 60 to 70% of the time, if I can identify a line as a termination condition, I'm going to lose any trade that I take into it. If I choose to go long after it's been hit, I'm more likely to lose. If I choose to go short after it's been hit, I'm more likely to lose. And when you know that, the edge is gone. And if rule number 2 is not in play, I can't for the life of me figure out why you guys want to trade into these lines. I did it because I was bored. I did it because I was afraid the market was going to go without me. Guys, the easiest trade you'll ever take will be coming away from Fibonacci resistance using momentum and path, trading to Fibonacci resistance, and it happens more often than you think. So is everybody good? Price reaches the area. Where are my triggers? If 4 triggers remain below resistance, above support, it's a termination condition. Absolutely no trades into the area. Wait for the reaction. Of course you're good. So here's what it looks like when it breaks, because they do break all the time, all day long. We would be range bound if they didn't. So this is kind of the flow chart, guys. Price is coming down, the sellers are in control, and they reach Fibonacci support. And when they do, you're going to ask, where are my triggers? And you're going to say, well, all 4 triggers are still above support. I choose to do nothing because I don't know what the reaction's going to be. I don't know if it's going to bounce, if it's going to reverse, if it's going to break. So if I'm not already in a position, I'm doing absolutely nothing. Guys, if your small triggers absolutely smash through that area with momentum, it's got to be momentum because momentum can break areas. Guys, this is what we call the 50-50 look. This is the second trade on the plan that I gave you. This is the one that says, with the small triggers through, with that level of momentum, this area has the potential to break. But it's just potential, guys. It's not a clear path, which means that it's medium probability, which means that it has to be managed assertively, which means that you're going to lean on the other 2 advantages. You're going to demand the momentum. You're going to insist on the perfect entry. If you want to make this one better, higher probability, let 3 trigger lines get below that area of support. On the KISS plan that I give you, it tells you that you have to have 3 trigger lines through. So if you're following that plan, you're not going to fall for the old 2 trigger Yahoo move. But when 4 triggers, when you say to yourself, 1, 2, 3, 4, all of my trigger lines are below that area of support, guys, now that area of support is broken. It's broken, the path is clear, and it will remain clear until you reach the next area. And when you reach the next area, we just rewind right to number 1. It's a termination condition again, guys. It's an area that I'm not trading directly into. In an uptrend, it's the same thing. Look at this. Price reached support. None of the triggers broke. There's your reversal. And when it reaches Fibonacci resistance, we start counting trigger lines. None of the trigger lines get above that area of resistance. Therefore, I choose to wait for the reaction because I don't know what it's going to be. I don't know if it's going to be a bounce, a reversal, a break. So for me, my money stays in my account if I do nothing. When 3 of those trigger lines smash above resistance with all that momentum, now we've got that potential breakout. Now the odds are favorable for that potential to break. There's a lot of opportunity there, probably most of your trades falling with this look. And then once all 4 trigger lines get above the area of support, guys, it behaves as, or resistance, excuse me, it behaves as support. It's broken. And the path is clear, guys, and life is good until you get to where you're going. This is crude oil. And just for grins, guys, weak triggers is where the reversal happens. Untradeable bounce off of support. See that tail that forms? That's the fight right at a key area. Another untradeable bounce right at the key area. Weak triggers, only 3 triggers through support and it holds. 2 triggers through and it doesn't hold. Right back to support. And guys, you can see the fights. And these tails are in fact the fights. And the easiest trade you'll ever take will be with momentum and path and trading to the next area. Straight to resistance, comes back and retests support. Guys, I can't make this stuff up. The market does it live every day. And sometimes you'll have momentum and path, and those yahoos will push down. Guys, that's your 20 to 30% right there. But look what they do. They set you up again. 2 triggers, big ugly bounce, and now we are clear path, but we're void of momentum. Guys, that's like the entire chart read, large chart, setting you up for success. And all you have to do is learn to be a little patient. There will be times when your path is not clear because of stacked areas. You're going to see fib after fib. You're going to see fib 1-to-1, then a divergence, guys. This is about 90% of your day. True story. About 90% of your day, you're like, nope, not yet. I choose to do nothing. You'll see in this room a lot of people that just post pictures and they say, hey, my rules aren't met yet, but instead of taking a trade, I took a picture talking about why they're not met. You're going to see that a lot. Guys, 90% of your day is doing nothing. The futures markets trade an average of $220 billion hourly. The S&P exchanges about $174 million daily. The NASDAQ is $269 million. You don't need to be in every move. You don't need to be the first one in. You don't need to be the last one out, guys. It takes $400 of consistent profits in a 252-day trading year. $400 a day times that 252, that's a 6-figure income. In a market that trades 8 hours, I think it's open 8 hours, you have to capture the highest probability, the best of the best. And guys, if you're not making $100,000 with your trading yet, learn how to do it the easy way first, because once you can do it, you'll find that there's a lot more to be had. Once you understand momentum and path, bump, ba-da-dum, bump, bump, odds favorable, momentum, clear path, you're going to find all sorts of creative ways to take money out of that market. Nice one, Cody. How's that for timing, guys? Odds favorable, momentum, clear path. I don't know. He's up to like 4,200 for the day so far. That's not so bad. You could probably buy something nice. Guys, learn how to call your shots and learn how to demand that the market give you what you need. It creates a lot of patience and it really takes the stress out of trading. Are we good? Large chart, strong triggers, clear path. When you understand these two concepts, it opens the doors for everything else that you can do with the software. These are your foundation, guys. Don't bypass this in the learning process. And if you need help, raise your hand. I got you. But once you have those, we're going to go to the small chart, to the faster chart, to the refinement chart. And guys, we're going to take an X-ray of that big chart. And from that X-ray, you are going to buy or sell a pullback, excuse me, at an area inside of triggers. The large crowd is going to tell you up. They're going to show you momentum. They're going to give you a clear path. And you're literally going to let the small crowd fight to take you to your best of the best entry, guys. And it is so accurate and precise that you're going to wait for the market to come to you with a limit order. You're going to be waiting, calling your shots. And you're going to use that limit order at an area, at Fibonacci, at a mid-band, or at yellow 1-to-1s. Because the same way on that big slow chart, those areas can stop a trend. That's what we look for to stop the small crowd. That's what we look for to create the bounce in the direction of that momentum and clear path. But there's a part of it that's so important, and I want you guys to learn this language, and I want you to write this down, and I want you to repeat it so many times that your children know how to identify an entry, guys. I am going to buy or sell. That's way too big. I'm going to buy or sell a pullback. I'm going to do it at an area, at a fib, at a mid-band, at a yellow 1-to-1. And here's the kicker, guys. That area is going to be inside of those large triggers. Inside of those large triggers. So you will know exactly where your entry comes from. I'm going to buy or sell this push down. In an uptrend, I'm going to buy it. In a downtrend, I'm going to sell it. I'm going to wait for that push to be at an area, at a fib, at a mid-band, at a yellow 1-to-1, and that area has to be somewhere inside of these trigger lines because trigger lines are moving averages, and moving averages define where the retracement is most likely to occur. Guys, we're going to use a little math to get us the best entries. So learn that language. It will take all the stress out of trading because you'll know right where your entry comes from long before you ever take the entry. And it's just a pattern, and it's a repeatable pattern. So in an uptrend, when the rules are met, your reversal bar starts the pullback. It's not your entry. It's a loss of momentum that hopefully takes you to your entry. Before it ever even prints, you can look at your triggers, large and synthetic. It's just two large triggers. Don't overthink it. These triggers define where that retracement is most likely to go. Doesn't guarantee it, but most likely. I like that phrase. And the market is most likely to bounce from an area inside of those triggers. And guys, when I write it out, I capitalize it because that is where the accuracy comes from, knowing that your area has to be inside of these triggers. So sometimes there's multiples, creates a window of opportunity. That's the phrase. You Ric Flair fans will know it as the woo. But guys, all it is saying with all of those advantages on the large chart, this is where the market's most likely to bounce and continue in the direction of those advantages. You're going to activate a limit order just above whatever area is closest to your reversal bar. Because of the momentum and clear path on the large chart, we're not going to hope it goes lower. We're going to get in with the understanding that they could push lower, and we're not going to panic because they're still above an area inside of triggers. And hell, they could even push lower, and we're not going to panic because they're still in the retracement zone. And if they continue to push 4 to 5 ticks below that retracement zone, below those triggers, you're going to be waiting with a protective stop. You are going to say, if the small crowd can break through the retracement zone, if the small crowd can smash through the areas inside of it, my advantage is gone. The edge is no longer in play. I choose to not be in this trade. And guys, this is where losers happen. And anything that wins 70 to 80% of the time will lose 20 to 30% of the time. Losses are not a negative. Losses are a cost of doing business, guys. And the key is that you take the right losers, that you take the losers that are rooted in advantages based on a pattern that you know wins more than it loses, and you're consistent in the method. Don't judge your trading plan on one trade, guys. You got to have 20 or 30 to get a sample. Any line below these triggers is not an entry. Once you get below the trigger lines, guys, 4 to 5 ticks, you don't know if, when, or where that market's going to continue up. There are a lot of losers taken by you guys saying, well, I had a fib, that should bounce. It's that damn word should again. Trades are not taken from the wrong side of the triggers. Not if you're following a plan. In a short trend, with momentum, clear path, beat the dead horse, guys. Rules met on the large chart. Reversal bar begins the pullback. I know exactly where it's most likely to go using large and synthetic triggers. I know exactly where it's most likely to bounce using the areas within. Learn the phrase, sell a pullback at an area inside of triggers. You will call your shots when the market's over here. Anything beyond the triggers is not an entry. This is where the market shouldn't go. This is where the advantage is gone. You'll activate a limit order just below the lowest point of resistance inside of those triggers. This becomes your entry for the highest probability trend trade. And guys, all this is an entry pattern, and it looks the same. And I pulled these out of the spreadsheet. This was this morning on crude oil. Actually, this was yesterday, 2:25 p.m. on November 6, 2025. With momentum and the potential to break, the market pulled right back to a mid-band inside of triggers. Would you guys do me a favor and give me a Y if you see it? Do I sound wound up, Jen? You're telling me deep breath. Do I need to calm down? Am I wound up? Oh, I might have taken a breath. Yeah, this stupid house is trying to kill me. When I walk down to the basement, my nose starts running. I think there's something bad here. But guys, this is it. This is your pattern. This is momentum. potential to break, pull back to the area inside of triggers. That's the whole high probability trend trade pattern. And look at this. This is 2021. And there's your momentum. And there's your potential to break. And there's your pullback to an area inside of triggers. I'm so self-conscious now, Jen. Thank you. And this is 2022. And it's momentum and the potential to break and a pullback to an area inside of triggers. And guys, all you have to do is learn this pattern. Boaz, don't let me down. Because first it's momentum, and then it's a clear path, and then it's a pullback to an area inside of triggers. And Boaz, the one challenge with this one was that your mid-band was still behaving as a termination condition because those large triggers were so far away from price. That created a little bit of challenge for you. It's a good looking entry, just didn't work out. So are there any questions about the high probability trend trade, guys? Are there any questions about identifying momentum? Because momentum is consistent. Momentum is always a separation between small and large, no matter what chart you're on. Are there any questions about termination conditions? Being able to look at an area and just count triggers. How many triggers have made it through? Any questions about pullbacks to areas inside of triggers? Guys, that's the keys to the kingdom. That's the golden goose. Those are the magic beans that sprout and take you to riches. You've just got to learn a pattern. And the more you study the pattern, the more you trust the pattern. And now we're going to go to TradingView, guys. The other platform, this is the platform that if you're in the Nexgen funding company, 99.9% of you are using this one. The plan that I lay out before you right now, people have been passing their evaluations with this plan hand over fist. It is based in simplicity, guys. So one thing that you'll notice is on TradingView, we don't have fibs. Programmers haven't been able to put it in yet. So we have zones. They're wider than fibs. These are supply and demand zones. You still have one-to-ones, triggers, mid-bands, divergence, highs and lows. But these zones will behave as fibs, like fibs. Don't trade into them. They could stop a market. Trade from them. That could be where the small crowd fails. So that's really the big difference between the two. That and minute bars. So NinjaTrader uses dynamic Renko. In dynamic Renko, it smooths it out. All the bars are the same size. And that market will move a lot faster. But minute bars take a minute, right? Your large chart is 15 minutes. That's how long it takes to print one bar, quarter of an hour. And a lot can happen, but we're going to use that 15-minute chart to define direction, momentum, key targets, and terminations. Your 1-minute chart, minute's still a long time. It'll define the immediate strength using trigger lines. It'll define your entry points. And guys, minute bars are nothing new to Nexgen. This is a picture from the 2004 trade plan. Pull back to a mid-band, enter with the close below. Close below to initiate the trade setup. That should sound familiar to all of you. And we've been doing this for 20 plus years with the minute bars, and now we're just doing it on TradingView, guys. So we're going to talk about how to read the chart. Large chart leads the way, big crowd. You're going to define direction not with background color, but with the direction of the small triggers. In the plan that I give you, there's actually a couple links to pull the large triggers off of the large chart, to pull the background color off of the large and small chart, so you focus on what you really need, guys. They're either up or down. Let them be. If you can't tell if they're up or down, they don't know which way they're going. Once you define direction, we'll define momentum. And since it's a 15-minute bar, and a 15-minute bar could have a 50-point spread on it, you're going to ask where the current price, the one that's highlighted, the active part of the bar, where is it in relationship to those small triggers that have just defined direction? And it's either left of those triggers, right of those triggers, or inside of those triggers. Those are the only three options. If you are left of the triggers, this is the strong side. This is the odds favorable momentum side. This is the best of the best side. This is where bigger moves tend to happen. This is also where 1 minute areas are most likely to break. So this is kind of your, I won't say loose management, but you're like, okay, this is that good look. Might be a bigger move. If you are right of the triggers, you're on the weak side. There's that comparison between strong and weak again. And from the weak side, I'm still looking for long trades, but I'm managing them very assertively. Maybe just getting paid at trouble, waiting for the next opportunity, because it is the weak side of those small triggers where reversals come from. We're going to use that logic for trend trade entries. And then if I am inside of the smalls, transition. And guys, it's rare that you will ever get an entire bar inside of those small triggers. It'll be partially strong or it'll be partially weak. I say always lean on whichever is the least. So if I'm partially strong and partially transition, I go with transition. And if I'm partially weak and partially transition, I'll just call it weak because I'd rather err on the side of safety. Hey, what's going on, Junior? Good to see you, man. Been a while. So guys, it's 1, 2, or 3. It's strong, weak, or transition. This defines your momentum, and this will actually set you up for how you're going to manage the trade. So direction, momentum, and you guessed it, path. Do I have room to targets? From the point I'm entering, is there room to make money? Everybody has a different number. My number is if I have at least $100 worth of profit potential, I feel like I can take and manage that trade. Some of you want to see 200. Some of you, yeah, I know who you are, say 40 is plenty for me. You got to pick your own number, guys. I can't give it to you. We all have different ideas. But you're going to use direction, momentum, and path, and I'm going to introduce you to one trade on TradingView, the trend trade. This is a trade that sets you up for success, and it keeps you in line with the large chart. So the 15-minute can't be trading into areas. You will have already defined direction and momentum. Make sure you have room to targets. It's rule number 1. Rule number 2 is making sure that you also have room to targets on the small chart. Not trading directly into areas, and that's where you're going to have to pick your number. How close is too close? But when you have a clear path on the large chart, when you've got room on the small chart, the entry is just buying or selling a close on the correct side of the small triggers at 1 minute mid bands, areas, and it looks just like this, guys, and it will always look like this. First it is direction, the small triggers are up. Then it's momentum. I'm in the transition side of the triggers, therefore I know that I may take partial profits, get to break even. It's not my best of the best look, but I'm still excited about longs. And there are room to targets. I've got room to make money. So I will turn my attention to the smaller, faster chart. And here's how the trend trade sets up, guys. Your small triggers on the small chart will roll over and go down. This is the immediate momentum of the move turning against you. This is what gets you the pullback. And the second the triggers roll down, you say, let me look lower. Let me look down here for an area, for a mid-band, for a zone, and let me wait for price to get there. When price reaches that area, and this is where we're different than NinjaTrader, we don't just jump into the market. We insist, demand, if you will, an up bar that closes on the weak side of the triggers. We're just going to call it the correct side of the triggers, and I'm going to blow this up for you. When you are gauging your close on the correct side of the triggers, you want to see both corners of that bar above those small triggers, because if it's like only one of them or partial, it's not a close above. You're still in that push down. And what you're going to see is that while this is your entry bar, since you're waiting for it to close, your entry will be on the next bar. It'll be at the same price, but you'll see your markers below this bar if you're doing it correct. TradingView even has a timer so that you can know exactly how long until that bar closes. And it's the same concept. From the weak side of the triggers is where reversals come. So if everything says up over here, This isn't a reversal of the overall trend. This is the push down to go with the underlying trend. Hey, good morning. In a downtrend, it's the same thing. Everything starts on the large chart. So in this chart, it's down. Strong side, there's room to targets. The moment the small triggers roll against that trade, I'm looking higher. I'm looking for mid bands. I'm looking for zones. I'm looking for one-to-ones. And guys, my entry is a down bar, which closes on the correct side of the triggers, on the weak side of the triggers. And that is where your trend trade starts. And guys, I've got you focused on the trend trade first because that really is about 90% of the trades. About 90% of the trades. 7 p.m. for you. So good evening. So Matafeka, you get the good evening. Jen gets the good afternoon. And the rest of you get the good morning. So guys, let's do the chart read. This is the NASDAQ. Does everybody see? There's no such thing as an awful evening. Evenings are way too long. There may be an awful moment in your evening. Guys, does everybody see that the small triggers are down? That's your direction. I'm on the strong side of the small triggers. That's the best of the best. And guys, from where price is, well, it was. If it pulls up to my area for entry, guess what? I'll be trading directly into an area on the 15-minute, which means I won't have room to targets, which means I should never go look over here as a brand new user following a plan laid in front of me. And guys, that's it. First, it's down, strong side. I don't have room to targets. I choose to do nothing. That's it. That's my choice. My choice is to not hope, wish, want, or pray, but to simply do nothing. Smalls are up. Larger up, price reached Fibonacci resistance. No triggers have made it above. This is an area that could stop the market. Large chart read is done. No reason to go to the small chart. Smalls are down. Larger up. I don't have momentum. Definitely not going long. Double termination. I'm waiting for things to work out to give me the next trade. I don't have momentum to push down. Don't have a clear path up, just choosing to do nothing, guys. And that typically is 90% of your day. You know, Matafaka, I'm not gonna feel bad for you. You got a free $50,000 account. You passed it. You've already been paid from it. And now you're working towards the next withdrawal. I think that's amazing. You are doing exactly what everyone in this room wants to do. I think it's outstanding. And if that is the root of your troubles, man, you're having a good day. You're having a great day. So guys, that's the first hour. The first hour is rules. The first hour is just chart reads. The first hour is defining entries, guys, because great entries create very manageable trades. Management really will be where money is made. Management is what's going to set you apart. And I want to show you something. So on the KISS plan, we'll go NinjaTrader. Entry is defined. You blew 2 funded yesterday. Today you're up 3K on this one. Right on. You full ported something and realized later, yeah, that's part of it. I love it though, man. Everybody loses, right? Even you guys that are amazing, you will lose every now and then. Guys, from this great entry on the KISS plan for NinjaTrader, we have created a very, very mellow management plan that's 100% if then, guys. And it's based on 2 contracts. And it's designed to help you understand and trust stop placement, as well as being focused on getting paid. It's interesting that traders hate to get out of a position. Well, we usually go full swing. First, we get out way too soon. And then we hold forever because we want more money. We want the market to give us more money. And you guys forget that all you have to do is make $100 4 times a day, and life's pretty good. So the management plan on the KISS plan, it is here for you in the client trades. I do want to go through it real quick because I want you guys to not only focus on entries, I want you guys to focus on management. I want you guys to learn those great entries, momentum, 3 triggers through. If the market pulls back to an area, inside of those triggers, that's where it's most likely to bounce. That's where it's most likely to continue. My stop goes 4 to 5 ticks below. If it comes and gets me, fine. No big deal. If it doesn't come get me, good. 3 triggers through, didn't work. But what I want you to see, there was a reason too, that one broke rules. When you can define entries, guys, it sets you up for the best of the best. So if your entry is 2 ticks below resistance inside of triggers, your initial stop is 4 to 5 ticks beyond the triggers. If then, this is where the market shouldn't go, guys, and you're going to know your risk before you ever enter a trade. You'll know your risk when the market's over here. You'll say, this is where my stop has to go. And when you take this entry, I want you guys, especially you guys that are on simulator, be good with just leaving the stop where the market shouldn't go. And it's going to get hit 20 to 30% of the time. Get used to it. Get accustomed to taking the correct losses because it is going to happen. You'll know your risk. And if you put your stop inside of the retracement zone, if you put your stop below areas inside of the retracement zone, guys, you're likely to get hit to watch it run. Targets are predefined at $100 and $200. And again, if you're brand new, if you're on simulator, if you're just practicing, let it play out. Wait and see what happens, guys. This is $150 per contract risk. It's a $300 risk trade on this trend trade. And one of two things are going to happen. They're either going to stop you out or they're going to give you a reversal bar in the direction of your trend. The reversal bar is what we call a confirmation bar. And a confirmation bar says, hey, we're doing everything the large crowd said that they wanted to do, and your new stop is going to go 2 ticks above that reversal bar. You will redefine where the market should not go. And now you have $60 risk as opposed to $300. And guys, there's a lot of you guys that I see with these sniper entries with $30 or $40 risk per contract on a trade, which is damn near unheard of in the futures markets, but that's what the methodology does for you. And it's either going to hit your first target or it's going to stop you out for a tiny loss that doesn't ruin your day. If it doesn't stop you out, guess what? You are $100 in the good. And when price reaches that first target, it's off. The contract's gone. It's over. That's your money. They can't take it from you. It's no longer exposed. And guys, that $100 is where confidence comes from. That $100 feels good. That $100 dries up sweaty palms, pulse rate slower. And guys, once you have that 100, you're going to go break even. You're going to take all of the risk off of this trade. Nowhere on this chart does it say where the market shouldn't go. That break-even stop with money in the bank is designed to remind you that you wouldn't even be in this trade if it wasn't for momentum and path on the large chart, and that market is more likely to scream down to that big chart target than it is to just reverse from the middle of nowhere. And if they don't come stop you out break even, that $200 second target produces a $300 trade, guys. $300. One trade, 3 to 4 minutes of active working, maybe 40 to 50 minutes of passive waiting for everything to set up. $300 a day, and this is what I'm going to show you guys real quick. I talked about 400 being 6 figures. $300 a day is $75,000 a year. Well, if you are on the prop firm with Pro Trader Funding, we have a copier. There's copiers out there, guys. You can take a $300 day and copy it on 10 accounts. The same $300 trade becomes a $3,000 day. And what is that? $750,000 based on the same $300 trade. So it's not about finding all the trades. It's about finding the best trades. It's knowing exactly why you're going to enter and knowing exactly why you're going to exit. And that's what the plans do for you guys. And now it's up to you. Now it's up to you to post in the room, to ask questions, to let me know how I can help. So I'm going to take like 3 or 4 minutes and go stretch my legs. When I come back, I'm going to load up every picture that's been posted in the room. And when I do, I'm going to go through the full Friday disclaimer, guys. When I do, I won't be the trade police. But if you are going to post in my room and request feedback, I have a request for you. Describe momentum, path, and entry on your chart. Annotate it. Tell me what you saw when you read your indicators. Because if there's a mistake with a read, my job is to help correct it. So I have to know what you see to make sure that you see it correctly. When you do see it correctly, when it is the perfect trade, guess what? You just wrote the recipe for the perfect trade. You made the pattern describable, you made it repeatable, you made it testable, you made it provable, you made it trustable through your annotations. And you'll come back and look at this, and you will never wonder if strong triggers, potential, and the perfect entry is a reason to get into the market. If you are one of my TV people, I would like you to define direction, strong, weak, or transition, room to targets. I want you to say it on every chart. And if you use the language, because the small triggers rolled against me, I waited for a pullback to an area with an up bar that closed on the correct side, you have written the recipe for the perfect trend trade. It makes it repeatable. It makes it testable, provable, trustable, all those able words. So do me that favor, guys. I won't be the trade police. You don't be the trade police. We'll just keep going back to advantages. So guys, I will be back in about 4 or 5 minutes. When I come back, we'll have a great rest of the day. All right, guys, I am back. Here we go. Tilt an account. I don't know what you guys are talking about. Start forcing trades, the old revenge trade. Pablo, you thought that was just trading. All right, guys, we're going to get into it. So I'm going to scroll up to the top of the room. You guys were really busy this morning posting charts. So I'm going to see what was done. Guys, do me a favor. If I miss a chart, if I miss a post from you, don't think that I'm ignoring you. Just say, hey, Mark, you must have missed one because you're human, and we don't appreciate that you're human missing our charts, but we know that it happens. And just give me like a timestamp, or even better, just repost it. I'll push you to the front. So I'm going to open all of these. Dun, 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 dun. You guys are busy. You know what's interesting to me? So I'm still not looking in the chat section because I'm clicking on everybody's links. It's interesting to me that there is about 5 or 6 people that consistently post in my room. And of those 5 and 6 people, all of them seem to be moving forward really quick. Motherfucker, I am human, and man, I'm doing amazing. My life is better than I deserve. There's no doubt in my mind. No doubt in my mind. Appreciate that. All right, guys, so here we go. First chart read. 15-minute down, strong side, clear to profit targets. The 1 minute closes below the small triggers. Clever. Picked up 125. Brought stop down to break even. Jumped to past break even. Slippage minus 75. Reverse to short. They know. We pull down to break even. Jump up past create slippage in their favor. Plus 50 ticks. Could have been worse. Could have been better. So trusting the trade. And you're absolutely right, Paul. And Paul posted in the room earlier. There's a gentleman in the other room. His name is Siva. Siva refuses to move his stops because Siva believes in his advantages so wholeheartedly that he refuses to move his stops, because what he knows is that when he's trading the patterns that he's studied, and guys, Siva's been with us for like 20 years, and I'm going to put one of his pictures up over here. He's been with us for about 20 years. He started before the rooms ever happened. There's his pullback. There's his close above, and he will literally hold his stop until he gets where the market says it's most likely to go, because he's been doing this and he's trusted it. And guys, that is a 50-something point move on a couple contracts. That's a couple $1,000s over the course of 7 or 8 minutes. And it's just a trend trade. And the one thing that he has on you guys is 20 years experience. He's got the trust. He's built it. He's there. He's good. But his entry is no different than your entry. And his reason for entry is no different than your reason for entry. He learned from Nexgen. And the difference is he has seen it so many times that he holds for that next target, that he holds for that VWAP. And guys, you're going to get there. If you are terrified to hold your trade on simulator, you are going to be petrified when you go live. True story. So practice, get in the habit. When everything says up, right? Here is momentum, potential to break, and then Pete, pivot, stop out, and divergence. Got to get in at the area, keep it low risk. Didn't work. And then when everything goes down, Pete takes the apology. I love the apology. This is the, hey, Pete, guess what? The market has the potential to break. Why don't you try it? And Pete says, okay, I will try it. And then they go, we were just kidding, Pete. Give us your money. And Pete says, well, I'll show you, because after you took my money, you created odds favorable momentum. And after you took my money, it happened over here too. I'm going to ride that momentum all the way down and I'm going to get my money back. And guys, this is heads up trading. This is saying just because this one didn't work, I can't go long anymore. My indicators say let's go short. And Pete really does it well. And you'll probably see quite a few of those from him today. With momentum and path, he jumps the fudge in. JTFI, I love that. Takes half off at 10 because he knows that the goal is to get paid. And then when he starts to lose momentum, he's out. Guys, that's the easiest $200 based on momentum and path you're ever going to make. And there it is again. When everything says up, get in above trouble, get paid before you reach trouble. Does that make sense? Newer users, Tiger Roy and PSP and Mahesh, what you're going to notice is that everything revolves around momentum and path. And if you go back, it's momentum and path on the large chart. 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 Guys, there are people making fortunes on momentum and path. All right, let's see what this one is. 15-minute down, strong side, clear path. Market gets a little snapback. There's your close below. You get in. A little bit of trust. Easy $300, Paul. Great job. Trading with the large chart. I can't stress that enough. And I think maybe sometimes I don't stress it enough. Large chart, guys, leads the way. Learn to read your large chart, and the rest of it just jumps off the paper at you. Trendy trend, triggers down, price on the strong side, space to the next trouble area. It's the same read. Small chart, price close on the right side of the small triggers, got in, rode it to the next trouble area, $520 gain. I hope this is enough screen. And Victor, that's perfect, because what did you do? You get to remind yourself in this picture that you knew exactly where the trade is coming from once those triggers rolled. And when it set up, you didn't hesitate, and you knew exactly where trouble was, and you got paid. And you made $520, Victor, on the same darn bar, which means that it was less than a minute. I love everything about this picture. Nicely done. And guys, as I go through these and I read these annotations and we talk about it, there hasn't been much room for coaching because you guys are killing it. But there will be, and you're going to see it. You're going to see some opportunities for a little bit of coaching. The rinse and repeat trade, triggers down, price and transition, space to the next area, manage assertively. He lets his read on the large chart dictate his management. Small chart, the triggers roll, pulls back to the mid-band and zone. He takes a close on the correct side, and he trusts it all the way down to trouble, $940. Pretty cool, right? All you have to do is learn a couple simple concepts. You can do what Victor does. Trends a million, triggers down, price on the weak side of the triggers. There is room to trouble. Small chart, price pulls up to the area, closes below, he gets in, goes right to trouble. You hesitated for a minute, but you still made your money, $650. Great morning thus far. Let's keep it rolling. Hell, let's go play golf. You're up $2,000 at 8 in the morning. Let's go play golf. Great job, Victor. Does it make sense, everybody? And I know that you new guys don't want to answer in the room. I know that you don't. Have you noticed that every chart posted has referenced large chart momentum and path in order to define ever going to look for an entry? That's what I want to stick. That's what I want you guys to recognize. Time of entry just below zone, in transition, all the strong triggers, price breaks below, snaps back to the zone. Jen, you take the momentum trade and you're out at trouble. Absolutely beautiful. That's $100 and then even more as it goes down. Beautiful trade. Large chart down, below trouble, get in below trouble, get out at trouble. It is a repeatable process, my friends. And then it pulls back to the zone, closes below. It's a little tight, so Jen says, you know what? I'll take it, but I'm not going to hope for a home run because it is tight and it was really fast profits. And you sold 2 at the 1-to-1s and it moved so fast you were unable to amend. I love it. And Paul W. just put in the room, Victor, congratulations. You're one of those new traders that studied and posted. Studied and posted. You're a winner more than losing. Impressive, you and Andy Valentine. Guys, that's all it is. It's the same thing every time. Strong side, room to trouble, below the outer band. Jen's only looking for shorts. Here comes price, doesn't quite close. That one closes below. And it's just into the oblivion, right? So let's just make money and then let's go break even. Outstanding, Jen. Large chart leads the way, small chart defines the entry. All right. Pete, reversed out of nowhere. I love that. Pete says, man, I had momentum and I had path and I took an entry and then I kept getting these stupid divergences, so I just made some money and got out. And then when 4 divergences print and everything starts to reverse and I have momentum, I'm going to see if I can ride that wave. And again, guys, when you can't go short anymore, you're going to find ways to go the other direction. But it's based on your chart reads. The one thing that Pete noticed, and we didn't talk about this morning, and I'm gonna discuss it real quick. Whoops. And I'll go to the user guide again, guys. I'm going to go back to the instructions. For you men, instructions are like a detailed written amount of words that tell you how to do something. My wife taught me that the other day. Apparently they're everywhere. Buy a grill, there's instructions. But under the NinjaTrader 8 indicators, under termination conditions, guys, there's one time where the small chart is showing you the change that you can't see on the large chart. Have a great day, Mrs. Novak. And 3 divergences in the same price range may terminate a trend. And what it is, and you'll see this when the large chart is really looking down. And here's a great example. The large chart is cranking down. And Pete, you're missing your synthetics on here, which means you're getting an incomplete picture. But the large chart says down with momentum. The small chart says, hey, there's some buyers fighting right at that key area. You can see it because they stole some momentum. And then the sellers try again, and the buyers are like, yeah, right here, seriously. Guys, we're thinking about up. I know you're pushing down, but we want to go up. And Pete gets in, and he's like, I know that there's a fight there. Let me get paid. And then the buyers again say, dude, we really want this market to go up. And all the while, it still looks like momentum and path down. And then an even higher divergence, a 4th divergence. And Pete says, you know what? The buyers are pretty serious here, and they're creating momentum up, and the sellers can't go any lower, and those small triggers are strong. I bet I can make a little cash. And it takes a while. It takes a while to be able to read your charts that fast. But this is one of those indications. This is one of those. I just noticed it because divergence from a fib is a killer. It used to be a reason for you to stay out of trades, and I know that your trade plan has progressed. But the more of these you see right at a fib, the less likely that market is to go down. Exhibit A. And you do a good job of recognizing those terminations and taking that small chart information to be able to say, okay, this big slow chart's probably not going down anymore because there's so much fight on a small. All right, Victor, another trend trade. Whoops, we're going to get rid of some just to... There we go, another trend trade. Let's see how he annotated this one. The triggers are down. Price is on the weak side. Manage assertively. No, not yet, Wayne. You're coming up, though. And guys, if you ever post in the room and have to go do something and miss it, all you got to do is tell me. We'll always go back. Another trend trade, triggers down, price on the weak side, manage assertively, space to the next trouble area. I mean, just very well described. Small chart, price close on the right side of the triggers. You're in at 71. So you're close on the correct side of the triggers. Victor, did you notice that the bar went directly to trouble and bounced? That's a pretty good red flag. That's a huge red flag. So your close on the correct side of the triggers was literally from the bounce off of trouble. And it bounces up. Well, you lost because it went higher and hit your stop, but that was your red flag to not take that trade. Does that make sense? Room to targets. You're in at 71, but it's already been there. And look at your triggers. They are odds favorable momentum up. Do you see it? Guys, one of the things that I notice a lot, and this isn't a rule, but if you're on the weak side of the triggers where reversals typically come from, and your small chart is odds favorable momentum up, you're probably going to lose that fight. And then Victor, once the triggers weaken, and then you get a close below, and now you've got some room down, right? Look at the difference in the triggers. From the weak side, this one will always have a better chance. And it did, and it took you right where you needed to be. Nicely done. Does that make sense? That's a pretty good chart read lesson. If I'm on the weak side, I have a higher chance of winning if I'm not fighting that direct momentum against me. Because the immediate momentum says we are going up and we are hell-bent on going up. And from the weak side of the triggers, they've got a better chance. But once everything weakened and those small triggers rolled, then you had a better chance to get down there. Good stuff. I like it. And guys, there's a million things to pay attention to. And you pick them up a little bit each day. Second higher divergence says no more shorts. Didn't say anything about a quick long. All right, so Ron says, check it out, guys. Price reached the fib. There's that divergence from the fib that I talked about. It's a killer. Second higher divergence says, hey, not only is the fight on, but they can't even go lower. And Ron says, there's my quick hit. Boom, let's make some money. Once I learned the high probability trend trade, I started to see these kinds of trades. Base hits pay bills. One or two things acquired every day, Paul. It's true. And if you're like me, if you learn one or two things every day, you forgot what you learned on Monday and you hope that it comes back again next Monday. I haven't stopped learning yet, guys. I take so many pictures. I spend so much time annotating charts that it becomes easy. All right, 15-minute up, strong side, clear path, pull back to the area, close on the correct side of the triggers, all the way up to trouble. Life is good. That's you, Trina? I meet Trina today. I'm going to forget her name next Tuesday because I met too many other people. True story. Cam, you're going to go with mechanical targets and management, but I'm not sure about the magenta 1-to-1s on the 5-1. I would. On a 5-1 chart, I don't worry about those magenta 1-to-1s. They're too small of a swing. Oh, man, I did miss that one, didn't it? Didn't I? I'm sorry, Ron. Guys, do you see all that momentum going up and Ron jumps in and jumps out? That's the chili dog. He graced you guys with this trade, the chili dog. When both charts are strong and there's nothing in the way, jump the fudge in, jump the fudge out before that momentum has a chance to go away. It's not an Nexgen trade, it's a Ron C trade. And then because of his recognition, he also created the pirate trade that fights a little bit. That's what I do. I've got mine, Cam. Even on the 13.2, I take them off. On crude oil or the S&P. I see two, Ron. We talked about that one. You know what's funny is that look is almost the same look as this one. Strong triggers, room to trouble, room to trouble. It's just catching it a little early. One goes with the large chart. One goes with the idea that the large chart can't go any lower. I like both of them. All right, upon entry, strong side, room to trouble. There's your pullback. There's your close above. And guys, I see you do this a lot. Enter above trouble. And that's cool. And Jen, great job not putting a huge amount of risk on this one. Guys, it peeks its head. One of the things that I talk about, when I talk about on these zones, trouble breaking, it didn't really break here, Jen. What it did is it prairie dogged. It popped its head above and checked the weather, right? If you're really going to take that break above, let it turn into a momentum trade or something, because the trade started down here. Like that's where the move starts. And by the time you get up here, your large triggers are still going down. Your small triggers are up. It's a hope trade, and you managed it very well. To lose 125 on this, I think, in my opinion, and my opinion means nothing, that makes sense to take a tight trade. If it gets back below that zone that you're hoping holds, GTFO, right? And if it runs, it's outstanding. And guys, this is one of those trades where it's not really a trend trade. It's trying to catch the second half of a trend trade. I like it. I like the trade. I like what you did. I like the patience. And I love the management. And to be able to lose 125 on this trade instead of giving back 300 or 400 is really smart trading. It's heads up trading. And it still cracks me up that it's the hope tard. I love that you transpose the A and the R's. You'll get canceled in America for that. No, don't be sorry. I think it's funny. My favorite large chart look. Strong triggers from a termination. Every indicator says down. And Pete jumps in below trouble. And he gets out before things go wrong. Momentum and path, guys. Momentum and path. And then it just keeps going. And Pete says, well, I'm not going to jump into trouble. That's just silly. These areas can stop a market. But when everything's going down, let's jump in. Let's get paid. Let's get out if there's a loss of momentum. And just beautiful. Do you guys see it? Sometimes I think maybe I see things too quick and I talk too fast. His large chart has every indicator down below trouble. His small chart has every indicator down below trouble. That's what I want you guys to see on this. Could have just taken both off right at a blue fib that stops the market, but he said, let's see if this one wants to run. And that was acceptable risk. I love a quick $200 all day long. Quick $200. And Jen says, this is why we don't sell a close below when no area has been reached. This is a good picture. And this is an understanding of the whole rule. Because the whole rule says pull back to an area with a close below, guys. And if you skip half of it, it doesn't work out very well. Jen, great picture. Odds favorable momentum, clear path. First one didn't make the area. Second one does. Out at trouble, out just above trouble. Boaz, beautiful trade. Same pattern, momentum and path. All triggers above the 1-to-1. Price hasn't reached resistance. Pulls right back to the mid-band inside of triggers. I mean, like it was designed to do it. Out at trouble. Let's let the other one run. Let's get a little extra cash on the next one. Beautiful trade, Boaz. Beautiful trade. Oh my. Odds favorable momentum, clear path. And guys, I want you to see something pretty awesome. And Cody, I don't know if you're still in here, but I'm just going to do this right here. So the large sugar was up, strong, clear path. And Cody says, check it out. I'm going to get in above trouble, and I'm going to get out at trouble. And that is 2 points, which is $100 on 6 contracts. So that's $600 in the bank without a care in the world of what happens next. And then when it breaks, he's back in 6. Back out 6, and that's another 8 ticks, another $600. In above trouble, Out at 8 ticks. Another $600, and then there's another one in there. But guys, what he doesn't do is hope. I don't hope this area breaks. I'll get paid before it. I'll get in after it. I don't hope this area breaks. I'll get in after it. I'll get paid before the next one. And guys, that is somebody that understands the software. That is somebody that lets a large chart lead the way and realizes that you don't have to be in a marathon trade to make a lot of money. And that's $4,200 up by 6:50 a.m. Nicely done, Cody. All right, 15's up, transition. It's clear to the zone. There's your pullback. There's your close above. You get in at 94, above the 1-to-1s, because man, I hate those 1-to-1s. And nice job taking it right up to the HVA, getting paid. Great work. You're out at 100 right at the mid-band. 230, 250. Great job, Paul. All right. It is momentum and path. And then Boaz, this is the one. Do you see the distance back to the large triggers? It's huge. Until that distance goes away, your mid-band, even though you're not near it, is considered a termination condition, because with anything in there, it's likely to suck back to it. And from a weak top, it's likely to suck back to it. And it just did. Your entry makes sense. The momentum looks good. The path is decidedly clear. This one doesn't work. And that's probably why, was the distance back to the large triggers, regression of the mean. All right, Wayne, here we go. This zone printed after the entry. Man, I see that happen every now and then. You just got to adjust. So reach determination. Everything rolls on the small chart. Odds favorable momentum. Market comes up, pulls back to the HVA with momentum. What a beautiful trade. And then you're out at the zone from 099 to 108. 9 ticks, 36 ticks. $360 trade quick. I like it. Guys, it's just a momentum trade right off of that high volume area. Great job, Wayne. And then it's up, Mark. And you enter during a pullback. And Wayne, I don't have any rules for this one. It worked. Everything is up. You're on the strong side. You jump the fudge in. It's a chili dog, right? Put your stop a little lower, what you were willing to risk, get paid. You were hoping that it went bigger and it didn't, but you weren't willing to give it all back. Nicely done. Nicely done. I like it. And just that outer band is the one thing that could have put a fly in the ointment. And it did. It did give you a little push down, but not a giant one with that level of momentum. And it just kept up. Nice job. I like how you guys are coming up with that chili dog on TradingView. Let's see what we have. Triggers up, but all of the zones. I don't know where this one's happening. 925, I guess it's right here. You went long into trouble? Is that right? You went long into all this trouble and it didn't work? And then when it rolls over, you said, no, I should be going short off a termination condition. I see an up. Where was your short? I see an entry, move stop wrong, drop before you got above zone. And then I see the short up here. And I guess that's one exit. It's hard to read because it starts with a long. Or is that an exit from a different trade? Okay. Sometimes I get confused. So you went short from the termination. And then you went short again from the termination. And then it dropped before you got it above zone, so it got you. And then you get back in, and it goes down. And then you get back in, and it goes down. And the bar closed below the triggers and you got in. I like it. From the termination Down it goes. Do you not want to use market flow? There's that awesome white bar pattern that you used to love that would help you catch these tops with a little more accuracy. But I mean, my goodness, can't go long. Let it roll, find a way to go short. And you did it beautifully. And I like that. And that was an oops with the mouse. You and Pete do the same thing, and you guys do it really well. My rules say absolutely no more longs. My small chart says we're probably going to push down from that area I can't go long. And you guys do such a great job of capitalizing on that. And I don't think new users realize how much being able to recognize a termination condition plays into how well some people are able to go counter and feel like they have an edge. And it all comes from that very, very basic momentum and path. So when you have momentum and the path is clear, preset target, base hits keep the lights on, odds favor momentum fading, so you let it turn into a trend trade and caught it on the way up. Nicely done. Nicely done, Ron. And look, that's all the pictures. Good job, everybody. Uh-oh. We lost Ninja Trader. I'll load it back up. I will load it back up. Got one more from Jen. So new users, welcome to Nexgen. This is what we do every day. First, we talk about some very basic rules that are designed to optimize your chances of success. And then you guys are able to put it all together and get feedback on everything that you do. And I'll tell you what, it's fun to post winners, guys. Go put a dry sup on a Daytona coupe. Have fun. That does sound like fun. I'm not going to lie. When I drive to Georgia, Wayne, I'm going to swing by and look at your shop. I forgot where I was going with this. I'm going to bring this back up real quick. Live. Son of a gun. I was going to say something, and it was going to be almost smart. And then I forgot. Dang it. A lot of sparkly stuff in this room. Guys, learn basics. Figure out how to do it easy. Once you figure out how to do it easy, there's so many. Me and Trina are related. It's because we're so smart, we can't focus on just little trivial things. We've got to see what the entire world is doing at once. It's a sign of brilliance, right, Trina? Let's go with that. If he's going to come after me, I'm going to protect you too. Guys, trading is such an emotional roller coaster for so many people. It is such and oh my gosh, is it going without me? It is such a, oh no, was that my trade? And guys, you can make it easy. You can make trading easy. And I'm going to pull this up real quick. If I'm on Ninja Trader, I've got three things to think about, guys. Do I have strong triggers? Are there no termination conditions? Can I define an entry? If you sit with this checklist in front of you and you start practicing, hey, I'm only going to enter the market when these three are true, guys, what happens is you still see what's going on in the market. And you start saying things like, well, I don't have strong triggers, which means that I understand that they're weak. And I don't have a clear path, which means that I understand termination conditions. And, well, I don't have an entry defined, but I did notice strong triggers and a clear path. And now I'm creating expectations that when I have these two, the market's hard to stop. I may change my plan. And, guys, that's what you're going to do. And then from this, go to your checklist for that 50-50 look. Follow the plan, right? And then from that, trading view. Guys, a trend trade's only three things. A momentum trade's only three things. But if you try to look for 4 or 5 different trades, you're giving yourself like 15 things to think about, and that's a lot for a new user. Gonna bolt, man, have a good one. Got on early, went way over goal, not sure what I'm going to do, but plenty of sun to do it in. Must be nice. It has been 45 and rainy here for a week. We will see you next week. Your turn at the hookah. I like it. Have a good weekend, Ron. Thanks for being here, man. What else? I know, right, Jen? I don't know if you guys have ever been to Washington. Where I'm at, it's beautiful most of the time. But now we've gotten into, I guess, the beginning of fall, and it's gotten kind of overcasty and cold and everything that I hate about weather. But I think I see sun today. So I'm going to grab Pablo, make him go play golf with me. It'll be fun. All right, there's crude oil. How's that for a termination condition? Guys, what can I talk about with you? Almost smart. That's hilarious coming from a man who had all of his responsible put on him and did it awesomely. Congratulations, almost smart. Your failed trade. Oh, I clicked on it and I didn't talk about it, did I, Jen? Sorry. That's that sparkly thing again. So let's look at it. 2 trades. The first one, it's down. It's in transition. Market's going up. And this is your failed trade, Jen? Are you ready? Easy fix. Is that an up bar or a down bar that you entered on? You entered on an up bar. The rules say wait for a down bar. I love that. Thank you, Hunter. But it's almost too simple, right, Jen? But even someone who trades as well as you trade is going to get caught up in the moment because you saw this one and you thought, oh, that's it. But it didn't close below. I have to wait for that close below. And then when it does, you forget to look for the down bar. But once it gives the down bar, and that was it right there, beautiful. And you get in right into a mid-band. Right into a mid-band. And it doesn't really go down until the small triggers get below the large. So we have two good lessons here. The first lesson is entering on a down bar for a down trade, and that's a great lesson. And the second one, and I don't remember who we did it with earlier, that is when this chart starts losing momentum, right? When this one goes transition or weak, odds favorable momentum in the immediate is more likely to win, right? So letting those small triggers at least turn in the direction gives you a fighting chance instead of fighting odds favorable momentum. Does that make sense, Jen? I mean, you still made money. I like it. How much did you lose on that one? So you lost 400 on this one, which means that you made 560 on this one. How cool would it be to be up 560, right? No, don't be pissed. But guys, this is all of our goal. Our goal is to eliminate the mistakes over time. And if you don't make the mistakes, Jen, you think you'll be thinking about that up bar, down bar next time you take a trend trade? I bet you will. Dollars to donuts, you're going to be like, oh my gosh, let me think about, was it an up bar or down bar? So Jen, if you didn't make that mistake, right? If you didn't make that mistake, then you wouldn't be thinking about it. You wouldn't be thinking about it next time. So you're that much better. Ron, I try not to swear in the room, but I've got a couple of them for you with that, just so you know. And then once it rolls, and now you're piecing it together. So that's, guys, it's a part of it. And it's not the fun part. It's not the fun part of trading. Losing is not the fun part of trading. But learning to avoid mistakes, it really is, because Jen, you're going to feel like a badass when you don't take that trade later. Oh, yeah, we talked about this one. Triggers up, strong side, clear path, pull back to the area, close on the correct side. So same lesson, Paul. There's your up bar on the correct side. You entered on a down bar, and that one didn't close above. So your true entry is here at 70, which gives you 13 points to trouble. Does that make sense? And it's subtle, isn't it? That's not 4 corners above, right? That's a down bar. That's the one. Is it the only one, Paul? No, of course not. They can all go against you, every one of them. Don't ever forget that. Is it horrible? No. But remember, when I teach in the room, guys, my job is to help you find the highest level of success. My job is to give you the best of the best so that you can go outside of the best and find more opportunity. All right. Oh, we saw this one yesterday, Miss Trina. Strong top, not odds favorable, but headed down fast, room to targets, let it get below, and wrote it down. I love it when you guys tell me to hold on. Just hold on, Mark. I got you, Trina. I'll be right here. It's the trade so nice she posted it twice. That's what it is. Great job. For those of you in funding that are using Nexgen Pro Trader funding, guys, today is the last day for 90% off of evaluations. Just a heads up. All right, Trina, trying to figure stop and target movement. Trying to figure out, should I move stop or target first? I made target before moving to trouble area while moving my stop first few times. Maybe was just moving too fast for you. So it's very probable that it's moving too fast for you if you can't get things in order. In at 97 with absolutely no room to a VWAP, that was tough, right? So you're trading right into that VWAP, which is 100, or maybe that's a trend line. Is that a trend line? That's a trend line. So you're going in and out, in and out. So you're wondering about how do we get, it's an interesting question, and I've thought about it before. So let's do it like this. And Trina, I don't have a definitive answer, so I'm going to talk out my thought process. If I enter a trade, I have the advantages I need to believe, I'll do this, to say it has a higher chance of going my way. So that's how I enter every trade, right? I do know it can fail. Those are the two things. Those are the only things that I'm sure of when I enter a trade. I don't know what's going to happen, but I know that I have the advantages that I need, that it's more likely to go down. But I do know without question that it could fail, right? So for me, Trina, if it's more likely to go in the direction of my trade, but it is also likely, there is that off chance that it could fail, I want my stop in place first in case it fails. I want to control my losses before I ever control my profits. That's my thought process on it. So when I enter a trade, my first movement is stops. I get my stops where they belong, and then I'll start worrying about profit targets. That's my thought process. Everybody could be different, and I just made that up on the spot. So I don't know how accurate it is, but there we go again, birds of a feather, right? And guys, everybody's different. Some of you will put your targets in place because you're focused on what you want to make. I'm always trying to protect my investment. And And I've done enough research and enough study to know without question that every trade, even great trades, fail. Like the perfect trade fails. You could have all the momentum. You could have the clearest of paths. You could have the perfect entry. And they can just run you right the fudge over, right? So when I get in, I want my stop in place, because what it really is it's an acknowledgement that every trade doesn't win. And guys, when you believe that, you start finding more winners, I think. That's a good question. Those are the questions that make class better. Thank you for that. I like it. All right, guys, I'm going to take 5 minutes. It's getting kind of quiet in here. One thing I did, I dropped it in the room earlier. I'm going to share it with you guys. I know that I want everybody on Nexgen Pro Trader funding. There's no doubt about it. But there's a lot of you that are already with Apex. You're already with Top Step, Take Profit, whatever. Not Top Step. They're not on Ninja anymore. So, guys, I built a trading view. Is it loading? I built a trading view lookalike. John Novak had already built one with all of the trigger lines and colors. Why is that not loading up? So what I did is I built for NinjaTrader a trading view lookalike. It's got a 1-minute chart and a 15-minute chart, but instead of zones, it has fibs. And I'm digging it so far. I like it because one of the things is when you trade Apex and you're on TradingView, what happens is when you enter the market, you have to right click and you've got to put a limit order in place for your stop, and you've got to do it on your target. And if it hits one of your targets, you've got to go back through and you've got to adjust. And guys, if you're on Nexgen Pro Trader funding, you don't. When you enter the market, all you got to do is slide, and it's pretty easy. But that's not the case if you're in a Trade-of-8. So I'm like, how do we bypass that? It's still calculating. John Novak made this using fibs, and he was running them side by side just for study purposes as we were building the plan. And I was like, but wait a minute, if I enter here, I've got an ATM strategy. I've got stops in place. I've got targets in place, and I've got it on impact. So if you want this, if you're interested in this, if you want to check it out, if you just want to run it next side by side, have some fun, there we go. Let me know. But if we look at the two, if you look at the two next to each other, that fib lines up with the zone. We're below the outer band. We're into the outer band. There was your potential HVA. They're similar. They're not exact. They're similar. Because supply and demand is different than fibs. But it still triggers down. That's consistent, right? I don't know. If you're interested, do you need to have NinjaTrader 8 loaded already? Well, yeah, Paul, you can't run it on NinjaTrader 8 if you don't have NinjaTrader 8. But if you loaded NinjaTrader 8 today, you could do it. You were on 7, weren't you, Paul? That's why you're asking. You were on NinjaTrader 7. If you're interested, get with Jason. Have him help you load if you need it. But yeah, it is, and you have a new computer, perfect. But it is, the workspace is designed for NinjaTrader 8, not 7. But if you want it, there it is right there, guys. You're welcome to it. And then, Paul, what you could even do, I don't know how tech savvy you are, but if you go to not great, let Jason do it then. Sometimes it's just easier to let Jason do it. And yeah, because he's going to need to build you a file probably. So let Jason knock it out for you. Jason's the best in the business. So there's the outer band, and there's a big bounce off the outer band. And there's the outer band, and it happened to be Fibonacci as well. Pretty cool, right? So one's not better than the other. It's just the same thing with a different view. Guys, I'll be back in a few minutes. I'm going to go refill my water and see what my dog's going nuts about. Talk amongst yourselves. See you in a minute. All right, guys, let's get back to it. Um, Jen, time of entry transition, room to trouble, because you're below everything, right? It's just nothing but the great beyond. So let the small chart dictate. There's your bounce. There's your pullback to trouble. There's your close below triggers. There's your entry. And Ninja Trader had a termination, so you decided to close for a quick 100. Outstanding. Quick profits. Nothing wrong with that. One of the challenges with watching both is one may talk you out of the other. It did me. Some of you pull it off wonderfully. Some of you are like me and you just can't. I can't look at two different platforms and two different bar styles because it means that I'm literally reading four charts and sometimes they conflict. Your charts said it's just Downsville population U and nothing ever changed. But who gets mad at $100? Not me. Definitely not me. And they're struggling, aren't they? They are struggling. Guys, we have an entire hour to talk. And I certainly don't mind stopping early if you guys don't have a topic that you want to talk about. But I would also absolutely love to talk about whatever it is you want to talk about. One of the things that I'm doing, so if you guys have ever seen our YouTube page, I've started doing shorts. Like, it's really y'all's winners for the most part. Yesterday we talked about contracts. We talked about being over leveraged. Someone asked the question and said, hey, how many contracts should I trade? And I had to say, guys, I don't give trading advice. But the most... yeah, which platform, Wayne? I mean, the reads are the same, right? Let me open up a NASDAQ. They both move fast. I don't know. I feel like the minute charts move the same speed all the time, just not intrabar. So yeah, I'll open up NASDAQ here. We'll go back and forth and we'll do it. Not traveling this weekend, Paul. I'm traveling next weekend. This weekend is the last weekend in Spokane. So we got 7 more days. This time next week, I will be on the road. John Novak will be doing it. No, but speed and size are two different things, though, right? So a 1-minute bar will always take 1 minute. A 1-minute bar will always take 1 minute. A 15-minute bar will always take 15 minutes. Now, how many bars can you get in the NASDAQ in 1 minute? So my 1108 is right here where it starts. My 1108 time marker is all the way down here. You get like 25. Now, why did you say either if you meant TV? Is he always like this, Trina? All right, so what's it say? I get comfortable with you guys when I feel like I know you. All right, so here's our read, and I'm just going to stop it, right? So every time I look at a chart, there's 3 things that I define on the large chart. I define direction, I define momentum, and I define path. Is everybody good with that? I don't care which platform you're on. Before you ever get off the large chart will define direction, momentum, and path. Well, direction is the small triggers, which means that the direction is down. So we'll put the answers over here. The direction is down. And now when I describe momentum, Wayne, and what I'm doing, just for everybody in the room, there are 3 places price can be. So first I look for the most current price, highlighted. And it is either strong, it is transition, or it is weak. One of the tricks you can use if you're not there yet is extend, whoops, that's too small. Extend your small triggers out. I just do it in my mind. Some people need the visual. So if I'm strong side, it means that the entire bottom of the bar is to the left of the triggers. And that's not the case on this one. If it is transition, we'll go yellow, then it means that some or all of the bar is inside. And then if it's weak, we'll put it yellow as well. Actually, it's not a stop sign, but just so you know. So you've got the three options. It's either strong, it's either transition, or it's weak. And I'm going to get rid of those. So this particular bar at the most current price is mostly inside of the triggers, a little bit outside. We're going to call it transition. Everybody with me so far? Cool. And then the final question, and I think the most important question, is do I have room to trouble? There we go. Do I have room before I hit something? And this is an absolute yes. There's nothing in the way. So it's down, it's transition, I have room. That's it. That's what gets me. I have room is what carries me to the small chart. So on the small chart, this is a little bit of a cluster, and we're not going to get a really good read for an entry because with strong triggers, I can take a momentum trade, but I don't have any areas to take a momentum trade from. And in this picture, if I'm going to take a trend trade, well, it's going to have to go way, whoops, wrong indicator, or wrong picture. It's going to have to go way up high. So in order for me to have a trade, there's my strong triggers. I could sell the HVA with strong triggers and hope it holds with all this momentum. How did I highlight price right side? I just used my drawing tool. I just went through on Snagit and I used the shape right here. And I made the fill whatever color, but you do the opacity so it's like 44%. So you can see through it. That's it. And they didn't come back for us. That's not our trade. So there's two options now. If they pull back to the HVA, I'm not going to have strong triggers anymore. So that HVA is pretty much out of the equation. What I'm hoping for right now with this look is that they pull back up to this area and then give me a close below. But look at where the box came up. Do you guys see how the box would put me above trouble? And it would have me trading directly into trouble, which means that I would no longer have a clear path. So what I want is I want that mid band to keep coming down. And this is one of the cool things about TradingView. There we go. That's my low point. That's where I hope the mid band and price collide. And if that doesn't happen, I'm just kind of stuck like Chuck unless I just want to jump in. Does that make sense, Wayne? First it's direction, then it's momentum based on where it's trading, and then how do I define my entry? Awesome. Let's do it on gold. All right. The direction is up. I'm on the strong side of the triggers. I am past trouble and I have room to trouble. Does everybody see it? My job is to look for an entry. There's this one right here. This is the trend trade line. You can do it horizontal. You can do it vertical. Any of those. What are you trying to draw the line for? And then here's your drawing objects. Oops, geometric text. So now we're pushing down from the strong side. So what do I need? I would need a close on the correct side of the triggers, right? Because my small triggers are against me. My rules say I need a close on the correct side of those small triggers. If that close happens in a zone, it's not my trade. If that close happens below these areas, that's not my trade. And if I get a close, do I have room to make money? And Wayne, this is where I hope they just slide sideways a little bit So those small triggers come down a little bit more. So when I do get a close, I've got room to trouble. Does that make sense? And if I just jump in, I'm fighting the small triggers. And that's a horrible way to make a living. And here's a good use of that trend line. There is my VWAP and my midband, and I want that close to be above that and above these triggers. And if it keeps going down, you know what? It's just not my money. But at least I didn't jump in. That is what you wanted it for, the line? Yeah, I love that. That keeps me out of a lot of trouble because I'll just say, okay, can't have an entry, right? So look at what it's doing, and this is why we don't fight the small triggers. Love it. Good question. Thanks for having me do that, Wayne. Guys, sometimes I need you to redirect me. Tell me what you need. All right, Cam says, Mark, can you help me clarify what I'm seeing here? Weak, good bottom on the two charts. So, Cam, weak bottom, perfect. Why? Because the small triggers made it through. That is the 100% remedial 101 defining weak, strong tops or bottoms. Now, Cam, one thing that you need to realize, where do termination conditions come from? Let's go that way. Where do termination conditions come from? Large chart, right? So my strong tops and bottoms, it's a large chart thing. It's not a small chart thing. Otherwise, you would have good tops and bottoms all day long on that tiny little insignificant entry chart. So yeah, so let it be the large chart. But Cam, one of the things that you have here, and I want to point this out because I don't think you realize just how smart this picture was. And I'm going to take this lesson and we're going to do it in like two parts. So the first part is how are fibs born? And fibs are born from thousands of calculations. So when the market goes up and down, up and down, up and down, your software measures every pivot. And it does every Fibonacci projection, retracement, alternate, all the things that it can do. And it creates thousands upon thousands of lines. And then it creates a higher time frame. And it goes through the same process. And then it creates a lower time frame. And it goes through the same process. And it synthetically creates off in the distance. And it goes through the process. And it goes back historically. And it goes through the process. And guys, it is a cluster fudge, like Foxtrot Charlie. And it's all of these lines. And then the algorithm kicks in, that little thing that let me know my brother was smarter than I thought he was. And from that algorithm, Cam, we get that Fibonacci support. We get that line that says, hey, this is where the market is most likely to stop. But what I want you guys to realize is that these fibs are accumulations of areas that are 2 to 3 ticks above, 2 to 3 ticks below. And it's kind of that center, right? It's the epicenter of goodness. Are you with me, Cam? And everybody in the room, really. So for the brand new user, for the I'm here and I need it to be black and white so I don't overthink stuff, if the triggers break through, it's a weak bottom. Plain and simple. Does everybody know that recipe for strong tops and bottoms? No triggers through reverses the market, strong bottom. But Cam, let's be honest, man. Sometimes they're going to overrun a little bit. Sometimes they're going to push just a little bit deeper. And your small chart starts showing you multiple divergences right from that little bit of overrun. Your small chart gives you 3 divergences in the same price range. Your small chart gives you a second higher divergence. What your small chart's doing is saying, hey, even though these are areas and that bottom is weak, you can clearly see that the fight happened right at that key area. Your divergences are showing it. So while you don't have a strong top or bottom on a small chart, you can use that small chart. Look at that. 3 divergences in the same price range and it comes down. But here it overruns. And down here, look at this. 1, 2, 3 divergences in the same price range. What was that? That was overrun. That was not being able to hit the brakes fast enough. And there it is, there's overrun. And that's that same reasoning, Cam, that divergence is one of the biggest killers when it's only the potential to brake. That was an awesome question. Does that make sense? Does that clear it up a little bit? So we start real basic. We start with the, hey, what is the ironclad way to define a termination condition? And then with a little more seat time, you begin to recognize other things going on. Good stuff. Z Robot, new guy. Have a couple trades in a live micro account with a fear problem. My plan fails, wrong chart stare maybe. I need help with a live account fear. Not sure. If, else, if, until, while, 50-50 fear. The hell does that mean? And the room changed. I need more live account tick time. Entries are good. Okay. Man, Z Robot, you're all over the place. So let's look at just what you did. What are you trading? You're trading the NASDAQ. And my gosh, let me see if I can make this bigger. Oops, cancel. It's hard to read. It's blurry. So let's take a look and see if we can bump this up a little bit. All right. It doesn't matter if it's micro NASDAQ. It doesn't matter if it is big NASDAQ. It doesn't matter if it's the S&P. But the NASDAQ, the patterns are the same, but it's different. Your NASDAQ is a 34.5, Z Robot. Your small chart is a 13.2, and it's that because this market moves so fast that it's untradeable if you use the same time frame. So let that be a thing. Now let's look at it and see what you did. So your first trade over here, 11.17. And again, this picture is really blurry. It's hard to see. I'm assuming it's this one just based on your synthetics. Actually, no. The first entry is right here. Is that right? Help me out. This entry is coming from this spot right here. No, you're okay. I think we can work it out. I just want to make sure I'm in the right spot because I can't read the timestamps down here. Control Shift. Maybe I can bump it up. We're going to get there, my friend. I promise. Yeah, they're still super blurry. But it's okay because I want you to see something. 11. I believe this is it. That's okay. So first entry is right here, yes? No. First entry, I can't read prices. Upper right? Then what's that entry? In the box prior to the trade. Okay, so this is the one that you want to discuss? So that's okay. We're going to make it super readable. So that's our big chart read. Cool, cool. And guys, this is okay. Like, this is no big deal. And this is the large chart entry, yes? Cool. All right, so I'm going to do this, Z Robot. And I hope that this all makes sense and kind of jives with it. And I love these pictures, guys. And this is what I'm passionate about. This is what I really enjoy doing with you. So I'm going to go back to just this really simple concept that the recipe for the perfect trade is momentum, clear path, and area. You familiar with that concept? That's the recipe for the best, right? So let's go through and let's talk about what we see. First, I noticed that the smalls are above the large, that there's space between the two, that everything is green, And Z Robot, are you comfortable with that? As that is absolutely the look of momentum. That's your strong trigger look. Rule number 1 is met. And now from rule number 1, remember we go direction up. You can't see it because it's gray, but that's okay. Momentum, strong. And now path. Do you see those yellow 1-to-1s? Do you see how all 4 triggers are not above those yellow 1-to-1s? I want to make sure that you see that. That all 4 triggers have not gotten above that area that could behave as resistance. Whoa, what did I do? There we go. So 50-50 trade. But what does that mean? That means that you don't have a clear path. And it's important as you go through this, knowing what you're up against is going to help, right? So it's only potential, not clear. It doesn't mean that there's not a trade. But what it means, no, definitely not. It's only potential. So here's our first aha moment. It's not perfect. So what does that mean? That means, and I'll just put a little side thing here, I will make sure my small chart entry is perfect. And when I say perfect, I'm not going to let the small chart take away momentum. Do you remember that divergence is a loss of momentum? That affects the big picture. And now I want you to see you entered below the triggers where the market shouldn't go. You didn't have one area sitting inside of those triggers, which means that you also didn't have a clear path. Or I'm sorry, an entry area. So no areas inside. Did you recognize all that in the moment, Z Robot? Because we're about to, no, okay, cool. That's okay. So you've got a lot of momentum going on. And you've got the potential to break. And it's good potential. There's a lot of momentum. And then you get a pullback and you've got virtually no risk, right? Did the market go down from that bounce right there? So we're going to talk about that. But if divergence is a loss of momentum, what you had going into this trade was potential, no high probability entry, and it's losing momentum. There's a point where being fearful is healthy. You're giving a lot away there. What did it do after? That's what I want to see. Is this the NASDAQ 1115? Was that it? I think that was it right there. I like it when you guys take the after picture. 13, 14, 15, 18. Hold on. I'm not sure where your entry was. Because our charts look a little different. But let's do this. I think it was probably, let's just use this as an example. So if the large chart's perfect, right? And I enter the market and the market's going up. The one thing that I'll ask myself is what's changed? And this wasn't perfect, but what's changed? So you're fearful because you're not trading a pattern that you trust. And that's the root cause of fear, is when I believe that I know what will happen, I create fear, right? So Z Robot, let's assume that this is the perfect trade. And it's not, but let's assume that it is. you'll get to a point to where you'll say, if I follow my plan, I know my plan wins typically, and we'll just say 70% of the time. Which also means that I know my plan will lose 30% of the time. Does that make sense? So it's not about fear of wins or loss. I don't control that. It's about execution of method. And I'm struggling with the typing here. And this is one of the things I think that gets us in the beginning, Z-Robot, is we put so much stock in whether a trade's going to win or lose that we forget to remind ourselves that we'll never know. So I'm going to go through it real quick, and I just want you to see. I want you to see that what happens is you start latching onto an idea that when you have momentum and the potential to break, that's your perfect entry. And the most common result is that it goes to Fibonacci. And when you have momentum and the potential to break, and you enter at the area inside of triggers, the most common is that it continues up to trouble, right? So you can go back and you can study this. In a perfect world, you'll go back on a large chart and you'll look for momentum and path. And when you have it, you'll drop a circle. And when you come back and you find that circle, what you realize, man, NASDAQ moves a lot, doesn't it? I'm going to crash my computer doing this. What you realize when you find that circle in 3 days' time is that it's nothing more than a pattern, right? And Z-Robot, with all that momentum, with the potential to break, what did the market do when it bounced off an area inside of triggers? It went up, didn't it? It went up with the large chart. And you're like, wait a minute, there might be something to this. Let me go find another tail that has momentum and path. And let me see what that one looked like. And that one pulled right back to a mid-band inside of triggers. And then it continued down. Uh-oh. Now I think I'm on to something. Hold on. Well, there's momentum and path, right? And I'm just going to put a circle on it here. And I'm going to scroll back. And oh shit, it probably stopped me out, Z-Robot. I probably lost this trade. That's one of the things that happens on NASDAQ a lot. So now we're batting like 600. And I scroll back and I look, and we'll just do this one. There is all the momentum and the potential to break, and I'll circle that tail. Haven't taken a trade, right? Pull back to a mid-band, all those advantages, continues up. And then maybe even on the other side with momentum and potential to break. Pulls right back to mid-bands inside of the triggers, and I'll be damned it goes down. So Z-Robot, not just you, but everybody in the room. The reason we're fearful is because we believe we know what's going to happen. But when I have momentum, when I have a clear path, when I have an entry at an area inside of triggers, I know that this is a pattern that typically wins more than it loses. And what on earth do I have to be scared about? All I do is I take the right entry. Whoops, I don't have an account up. I take the correct entry. I put my stop where the market shouldn't go. And I sit on my hands and I hope. Because if I take that same pattern 100 times, Z-Robot, how many am I likely to win? 70. And if I take that same pattern every time without hesitation, without fear, without conflicting thoughts, can we agree that my odds of survival are way better than my odds of failure? 100%, right? Look at this. We just did it. We just made whatever really fast. So Z Robot, fear comes from not believing that pattern is effective. Fear comes from not proving to yourself that that pattern works more than it doesn't. That is where most traders struggle in the beginning. The entries are easy. The entries are easy, guys. The entries are so easy to find. All it is a pattern. Now, if you trade into a termination condition, your 70 to 30% goes way down. If you trade without the advantage of momentum, your 70 to 80% goes way down, right? If you trade from the wrong side of the triggers, your 70 to 80% goes down. So how do we keep that trust? We keep that trust by focusing on the execution of the method. And that is why I stress to you guys every day, keep it simple, focused on the best, and you'll begin to find more. And Z Robot, that is one of the greatest questions anybody could ever ask in this room. How do I eliminate fear? You eliminate fear through trust. Does that make sense, everybody? With momentum, with a clear path, there's your entry at the area inside of triggers. And then Boaz, there's that second higher divergence again. So once you start taking the perfect trades and letting them play out, you start to have the brain width, the capacity, the bandwidth to begin to recognize the small chart giving you patterns that said, hey, we might go higher, but since the large chart is perfect, let's wait for confirmation and still go with it. And Boaz, did you recognize the second higher divergence again? And this is something I think we started talking about this week. A second higher divergence can be an exit condition, get you out of that trade break even, but if the large chart's perfect, that confirmation bar puts you back where you need to be. And that's the challenge with the NASDAQ, right? Guys, if the market you're watching is too fast for you to make good decisions, if it's too fast for you to move stops, if it's too fast for you to get your targets in place, well, it may be too fast to trade. You'll have to make that decision. Great looking entry though. I would lose that trade with you 1,000 times. Stop makes sense. Just too fast to be able to react to that second divergence. Great job. Does that make sense, guys? And I want to go back, sorry Trina, before we get yours. What you will find is that if you take the time to scroll back and find your rules mat, this is a great example right here. And this happened while we were doing everything we were doing. Do you see how it had momentum and path? It didn't reach the divergence high. The triggers were crazy strong. Everything was good. And it failed. Well, this is why we run synthetics on a large chart. Does everybody see the divergence from a fib? Divergence from a fib, guys. This is the thing that pissed off a lot of the automation system users, because the large chart doesn't run synthetics. You've got to look for context clues on the small chart. But in Z Robot, sorry, I'm going to go back to it and I'm going to say that if during your study you post this picture and you say large chart perfect, small chart entry defined, what happened, right? Because we all want to know, why did it lose? And sometimes the answer is because someone with a metric crap ton of money wanted it to go down. But more often the answer is you're not running your synthetics. And when price reaches Fibonacci resistance and all of the triggers remain below, it's a termination. Where was your question, Jen? Did I miss it? Did I miss your question? Oh, I didn't do it on purpose. Will you repost it? Please. Thank you. Sorry, I missed it. When did you post it? Oh, here it is. I got it. My bad. Sorry, I got on a tangent going through some stuff. I didn't see you slip it in there. Oops. Let me get my chart normal size again. All right, my question mark, if we have a pullback to an area on a large chart and smalls roll on the small chart and close below, would that be considered an area, albeit on the large chart? You're going to have to make that decision, Jen. Because my rules say pull back to an area on the small chart. Remember earlier when you said without an area on the small chart, stuff like this starts to happen? It's not the rules. It's pull back to an area on the small chart. Because if we didn't need the small chart areas, why would we even talk about them? High five, Hunter. He's right. Keep them focused. Area on the small chart. You can do whatever you want. You can do whatever you want. Boaz, we already saw one of yours. Second higher divergence. Got you. And then this one was momentum and path. Perfect entry. Easy money. Nicely done. Jen, have an amazing weekend. Thanks for being here. Thank you. You're starting to get really smart. You're outthinking yourself a little bit. So, Boaz, I think we got both of them. We got your second higher divergence was moving too fast. And then just the perfect trend trade. Easy money all the way down to support. Good stuff. And then, sorry, Miss Trina. The smalls are up. Strong side. Room to target. Pull back to the area. You entered after the close on the correct side and above trouble, Trina. Because there's your close on the correct side at 05. But there's not a lot of room. And there's really not an area. So you said, let me catch the second half of the trend trade. I'll get in at 07, 05. And why did you get out at 087? Stop where the market went last, but should have used the outer band. Oh, okay. I like an awareness there, Trina. That's not an exit condition. Why? Because you've got a freight train with nothing in the way. And you've got a freight train with nothing in the way. And what are the chances? That's going to just stop the market, right? It did it here, but here it couldn't get out of the zone yet. Here it didn't have odds favorable momentum. The small triggers were weakening, right? So they know about it, but you had every advantage. That's a little overthinking. I am so guilty of that. I love my targets. And if nothing changes, or if you're fearful, right? Oh no, I'm at 085 and last time it created a bounce, I better go break even. Nothing says get out, but I've got to kind of squash my own fears. It's not an area. Where you exited at 087, there's not a zone. There's not a one-to-one. There's not a zone. There's not a one-to-one. You're on the wrong side of everything when you get a close above, right? There's nothing there creating a bounce. It just decided to go up. Does that make sense? The rules say pull back to an area. These one-to-ones were your lowest area. It broke below them. The triggers went down. You had odds favorable momentum. Hell, you could have even taken a momentum trade off those one-to-ones. So what you did is you said, I don't have anywhere to go from here. The red, this one? Okay. I see what you're saying. So let's do this. If I'm expecting this area to hold, doesn't it make sense that the market would bounce from it? Now, if the market gets all the way below it, How could I expect it to hold? It's already broken. Does that make sense? Yeah. So what you did is you said, uh-oh, everything is cranking up now, and I'm in line with the large chart. Let me get above that visual that could potentially stop my forward progress. But you're not trading from it. You're just waiting for it to break and then jumping in. This would be very much a jump in the fudge in, almost like a chili dog, Trina. You're on the strong side of the smalls. The large chart says up and strong, there's room. And you said, let me jump in and see if I can't make some money. No, not a trend trade. Because a trend trade is a pullback to an area with an up bar on the correct side. We just didn't fit the recipe. Because if you were taking this as a trend trade, wouldn't your stop go down below the pivot, the low pivot, which means that your 075 entry has approximately $450 worth of risk. Whew, that's a lot. I love the trade, don't get me wrong, but it's not a true trend trade. And this is one of the things, did you put your stop below the zone? And that's what I would say, because what you're saying is with the large chart look, with the small chart breaking above on the good side of those triggers, I don't expect this zone to be a problem. And if it gets back below that zone, a problem happened. And I think that's great management on these breakout style trades. It's a nice trade, it's just not a trend trade. But if it blows well below the area, you can't say that you're trading from that area so much. Good trade. Boaz, momentum, path. Since your area was on the wrong side of triggers, since your small triggers were down, and then Z-Robat, this is one of the things you're going to have to learn to trade the NASDAQ, Boaz gets in on the correct side of the small triggers. And that's one of the things NASDAQ will do to you. NASDAQ overruns, guys. It's a crazy temperamental market. Perfect entry. Out, and then third divergence prints. Great reason to exit. Man, Wayne, thank you for posting as much as you do. When you guys post, I get smarter. It's a true story. All the lessons that I get to give you, I think about when I'm trading myself. So enjoy your weekend. Do something fun. Go fly a plane if the weather permits. Don't think about trading. All right, price reaches reaches yellow 1-to-1s. None of the triggers break, and so far the market hasn't gotten below it. That's termination conditions 101. 101. And then Boaz just showed it to us. Weaker triggers, 1, 2, 3, 4, 5 divergences in the same price range. And sure enough, that's where the reversal started. And then with all that momentum, there's your momentum trade. Down to trouble. Good stuff. Good stuff. Did you guys learn anything today, this week? Feeling good? I hope so.